Our second session, the subject of our panel is gas, the future or a transition fuel only. And our keynote speaker is Mr. Robin Mills, CEO of Kamar Energy. I would like to invite you to the stage. Okay. Our moderator is Onur Kumbaracıbaşı from Fox News Operations Director. Hamad Rashid İbrahim Al-Muhannadi, Senior Advisor, Qatar Petroleum, former CEO, Gas Company from Qatar. Mr. Vladimir Fagin, President, Institute of Energy and Finance from Russia. Ms. Belayfa Mahshuba, Head of Gas Market Analysis Department, Gas Exporting Countries Forum from Qatar. And Mr. Trevor Whitten from Whitten Consulting. The stage is yours now. Mr. Mills, we are waiting you.
Okay, thank you. Good afternoon, everyone. Could we get the presentation up, please? Thank you. So, good afternoon, everyone. A little later than we expected, but glad to be starting again after lunch. And I'd like to talk about the prospects for gas in the longer term as a bridge fuel or as a destination fuel. I'll be outlining three possible visions for the gas industry, looking at some of the key gas trends at the moment and in the future, and increasing global gas connectivity, looking at the competition for gas, and then some conclusions. And the three visions for gas that have been outlined by different viewpoints of different competing organizations. One is that gas, in a sense, is a dead end, that we're moving into a renewable future in which gas will be progressively used less and less. And this might come about because of a shift from coals directly to very competitive renewables, strong action on climate, and LNG costs remaining high and not able to come down to keep gas competitive. The second viewpoint, and this is perhaps the viewpoint closest to much of the industry and to some major international organizations, the IEA and so on, gas as a bridge fuel, so gas over the next few decades, up to 2040 or so, becoming more and more important before renewables gradually take over. And gas, in this case, playing a role as a flexible backup to renewables, gas still being used in industry and perhaps in transport, but gas not really making it in the longer term, because gas, of course, is still a carbon-containing fuel. And in this case, gas, carbon capture and storage, or CCS, may not take off as a really successful and viable technology. And the third vision, which I don't hear outlined very much, but which is also a plausible one, I think, is gas as a destination fuel, i.e. gas which long-term is a major part of the energy mix indefinitely throughout much of the 21st century. And this would be achieved if gas carbon capture and storage is successful, so we can burn gas cleanly without emitting carbon dioxide. It's achieved by unlocking the massive unconventional resources that we know we have. We've seen this in North America already, but we know these huge unconventional resources exist worldwide as well. Shale gas, tight gas, and so on, but even beyond that to more speculative sources such as gas hydrates. And this could be driven by the difficulty in balancing renewable-only grids, so in which gas is always an important part, an important component of the electricity mix. So, to outline some of the current trends that might lead us to one of these or other of these futures, on the supply side, we know that unconventionals, new hydrocarbon resources, so new conventional gas as well around the world, means that we have resource abundance at reasonable prices for the foreseeable future. And new production technologies, hydraulic fracturing and horizontal drilling for shale gas, and liquefaction, for example, floating liquefaction plants, mean that, again, that supply is being brought on stream around the world in different locations and at reasonable costs. That's pretty interesting, but perhaps the more fundamental shifts in gas have been on the demand side, where in LNG we've seen a shift to a buyer's market, at least for now, more consumers and more varied markets, particularly in Asia, and we are seeing new countries venturing into the LNG market. LNG markets in general are becoming more flexible and more liquid. There are many more buyers and sellers and traders involved. And even outside LNG, within pipelines, there's more transcontinental connectivity, new pipelines, China's Belt and Road Initiative, and so on. And new business models being driven by this. So new traders who are trading LNG without having any portfolio, any supply portfolio of their own, new pricing methods, LNG being priced off US gas prices, for instance, or even priced off traded gas hubs. And, of course, the growing demand for gas as a clean, lower CO2 fuel. We see severe pollution problems in many big Asian cities, and gas is potentially a big part of the solution to that. So gas, has been described by the IEA and others as the 3 A's: abundant, acceptable, and affordable. I've made the argument that it's abundant. In terms of the fossil fuels, it's not growing as fast, of course, as renewables, not forecast to by 2035, but it is the fastest growing of the fossil fuels, much quicker than oil. And coal, in this view, this is an IEA view, but in this view, coal hardly growing at all. Some other views maybe that coal would even shrink. So gas is growing up perhaps 1.5% per year, a relatively fast-growing fossil fuel. And unconventional gas is going global, unconventional and conventional. So the yellow stars here you can see are unconventional gas resources, shale, tight, or coal bed gas. Now we know about all of that in North America, but it's also being developed in Argentina. We know there are substantial resources of unconventional gas in the Middle East, and Oman is leading the way on that, on tight shale gas in China, which has made, I guess, slow progress so far, but we're still with a large resource base. Coal bed gas in Australia, which is entering the global market as LNG. And then new conventional gas we shouldn't forget about as well. And we've had numerous major conventional gas discoveries around the world, particularly in the offshore, East Africa, now in Northwest Africa, and other parts of the Eastern Mediterranean and other parts of the world as well. And the geological potential of gas, I think, is unquestioned. I've shown here a breakdown of reserves and resources by region. So we have conventional gas in the red, and then shale gas in the yellow, and then tight gas and coal bed gas shown as well. And you can see that in many regions of the world, the total amount of resources greatly exceeds the cumulative amount that might be produced over the next 20 years or so. In other words, regions like the Middle East and North America have enormous potential to add to global supply with their resource base greatly exceeding the amount they're consuming. And this is still, I think, relatively conservative because, for example, the Middle East shale gas that was assessed here is only assessed for Saudi Arabia, the UAE, Oman, and Jordan. Now we know that areas like Iran, Iraq, and others probably also have very large shale gas resources, but have had no need to even look at it or try to develop it now because of large conventional gas. And I referred to the unlocking of technology of new gas resources around the world, and floating LNG is one of those, and this is from a study we did for KPMG recently on floating LNG around the world, and these are all of the projects that have been proposed. So these are floating liquefaction plants. The idea is that these can be installed much more cheaply and quickly, and perhaps for smaller resources in remote fields that are not economic with conventional LNG. Now, so far there are about four floating LNG projects in operation or into construction around the world. A couple of the notable ones, Shell's Prelude project in Australia and Petronas's floating LNG project in Malaysia. And there are several more coming up in Africa, Latin America. But there are many more that could happen as the technology gets a bit more mature and developers are more comfortable with it. And this means that LNG, although countries such as Qatar, of course, will remain very, very large, very important players in LNG, but there's also room for smaller players and for more unexpected players to come up around the world. Now, at the same time as this increase in the amount of supply and the number of supplying countries, there's also an increase in the number of importing countries. And a lot of this is via floating LNG import terminals, which have become pretty much established as a standard technology now. Very quick to install, cheap, flexible, can be used in a market. If it's not certain about its long-term gas demand, it can install it within a year, and then if it's not needed, it can sail off somewhere else. And so this is opening up markets that would have been never been thought of as viable for LNG imports even a few years back. So we've seen recent years, we've seen, for example, around the world, we've seen the Baltic states coming up, Pakistan, Bangladesh, and then some African countries now looking at this. Benin, I mean, remarkable to think that a small country like Benin might become an LNG importer, but it is a very realistic prospect. And this is saving on, it's creating new markets for LNG, and it's saving on the consumption of usually oil for power, or it's bringing energy to countries which were very short of it before. And this is a great, at a time of oversupply of global LNG, this is a great benefit and is allowing big producers of LNG to place some of their LNG into the market and not just have to go to the traditional buyers of Japan and Korea and Northwest Europe, but to be able to look at new buyers as well. And I think gas is very often thought about almost solely as a fuel for power, but of course gas is a very important fuel for industry. And I think when we think about the future of gas, this is sometimes lost sight of. The increase in industrial gas demand, and showing this just for three countries, three regions here, China, India, and then others. You can see again over the next 20 years or so in the emerging Asian markets, yes, the growth in demand of gas for power is very significant, but the growth in gas for industries is even more so. You can see in China, it's considerably more than the growth in power. In India, it's about the same. In the others, it's about the same as well. And then also potentially gas for transportation as well. So gas for trucks, gas for shipping, potentially. Again, a relatively clean fuel, potentially cheaper than oil as well. And we're looking there at the 2020 enforcement of sulfur limits on fuel for shipping, and if that opens up a possibility for LNG in the marine sector. So even if we do believe in a renewable future and in the power sector, there is still a very large industrial sector that likely is going to continue to need large amounts of gas. And gas is acceptable, the cleanest fossil fuel. It produces very, very limited pollutants, conventional pollutants. It produces much less CO2, about half the CO2 that coal does. And I've shown here a comparison of some of the conventional generating technologies, so gas turbines, coal or diesel, versus, and also those coal and gas with carbon capture and storage. And you can see the cost of pollution from a conventional coal plant or a diesel turbine. So this is not looking even at just at climate change, but this is looking at particulates and sulfur and so on. The cost of pollution from a coal plant, for example, is something like 9 cents a kilowatt hour. Now, if you think that a US typical wholesale power price might be about 10 cents a kilowatt hour, so probably the US power price should double just on the basis of the damage, the local environmental damage from coal. However, gas is not entirely non-damaging, but much, much lower than coal. And if we use carbon capture and storage and hence capture most of the CO2 emissions, then the damage reduces to very little indeed. Carbon capture and storage, I think, is a key technology for the future of gas, certainly the long-term future. The medium-term future for gas is pretty good because gas has the opportunity to replace coal, and it's much lower CO2, as I said. But the long-term future, gas is still a carbon-containing fuel, and if gas is going to have a major role in the very long term as climate limits get more and more strict, in my view, carbon capture and storage will have to be successfully deployed. Now, we have most of the technology we need for carbon capture and storage. There are 22 large-scale projects operating worldwide, some of them on coal, but many of them on gas as well, capturing about 40 million tons of CO2 per year. However, the cost of capture is still relatively high, and we'll need a lot more large-scale projects to bring those costs down to something reasonable. We've seen, I think, in recent years how a lot of spending, a lot of deployment in solar power and wind power has brought down costs of those technologies very significantly, and we need to see something similar for carbon capture and storage. Now, CCS is often thought as a technology that's meant to be there to save coal, but it is very applicable to gas as well, and perhaps in some cases even more applicable and actually easier to apply on gas power and on gas industry. The picture I've shown here is the Al Riyadh carbon capture plant in Abu Dhabi, which opened last year, which is capturing CO2 for a steel plant. Very easy to capture. The CO2 comes out. It's almost pure. It just has to be compressed, and it's then used for enhanced oil recovery. So this is a pretty low-cost project. It's saving about 800,000 tons of CO2 emissions per year. there's a lot more opportunities like this in the industrial sector and the petrochemical sector to save CO2 from gas. I talked a bit about global gas connectivity in terms of LNG. Now, if we look at what's likely to happen in global gas trade over the next 20 years or so, we're seeing, I think, in most regions of the world, a continuation of trends that were quite obvious, with one exception. So what I'm showing here is gas exports or imports by region. So anything below the zero line is an importing region, anything above it is an exporting region. And you can see that in this case, Europe and Asia become bigger and bigger importers of gas as their demand grows and their own domestic production declines, or at least doesn't keep up. So that's a pretty obvious trend. We've known about this for a while. Gas from the Middle East, gas exports have increased significantly in recent years, mostly due to LNG from Qatar. But after that, they're not forecast to increase very much. A lot more gas is being used domestically in the Middle East, and this is eating up most of the increase in supply. Russia, of course, the former Soviet Union, a big and growing gas exporter, now set to export to China and Asia as well. The real change here and the real reversal is the one you'll see in the red line, which is North America. North America, which was importing a certain amount of gas until quite recently, has turned around, is now exporting LNG, is exporting gas by pipeline to Mexico. And in the next few years, North America as a whole, Canada plus the US plus Mexico, will become a significant net exporter of gas, entirely as LNG outside the North American region. And this, of course, has been led by the US shale gas revolution, but also by new business models, new ways of pricing LNG. And within Eurasia, we have gas connectivity developing as well. So this is China's Belt and Road Initiative, about connecting China with the Middle East, Central Asia, and ultimately Europe through a marine belt through the Indian Ocean, which is the blue belt, and then a land belt through Central Asia, which is these yellow the yellow lines shown there. And this is about connectivity of all kinds: roads, railways, ports, oil storage facilities, oil storage hubs, trade facilitation, telecommunications, so connectivity in all ways. But of course, gas connectivity is a major part of this. And we are seeing the development of, we've already seen, in fact, the development of gas exports from Central Asia into China, mainly from Turkmenistan. Russia has concluded deals to sell gas to China, which demand a lot of pipeline construction, but Russia will be exporting increasing amounts of gas to China. And there's other gas connectivity projects which may be not going to China directly, but may be supported by China or may take part as just part of a general development of connectivity within Eurasia. And we heard this morning about the role Turkey plays in that. I think that's very interesting. Turkey, its geography really being ideal for it as a gas bridge from Asia and the Middle East to Europe, so bringing gas from the Caspian and potentially from the Middle East. And then, of course, also a new route from Russia through into southeastern Europe and onto Italy. And then South Asia as well, another developing area of gas connectivity, where at the moment is supplied entirely by LNG and its own domestic production, but with continuing plans for gas pipelines, potentially from Iran or from Turkmenistan, or both into South Asia, so into India and Pakistan. But gas faces a lot of competition, and I think the gas industry certainly should not be complacent. In some markets around the world at the moment it's winning, and some markets it's not. If we look at the ongoing competition with coal is a very cheap fuel. So I've shown here an estimate of a typical Henry Hub-linked LNG price, a delivered price. That's the orange line. I've shown the Singapore LNG index, typical Japan contract price. Those are the green lines, and then coal. And coal is the black line is a very cheap fuel. It's a very dirty fuel, a very carbon-intensive fuel, but a very cheap one. And if there's no price on pollution in a certain market, then many companies and many industries will choose to use coal instead of gas. We've seen in Europe coal tending to outcompete gas. We've seen coal being cheaper than gas in China and India, and so gas struggling to make inroads. We've seen the opposite in North America, where US shale gas has made gas so cheap that gas instead has been beating out coal quite successfully, even without any major controls on pollution. So, gas can win or lose in these markets, but it means that gas does have to pay attention to being very cost competitive and not thinking that just being clean and available is good enough. And it's very important to keep bringing down the break-even costs of projects. So this is an example of some new potential new LNG suppliers, and you can see here that some of them are break-even costs perhaps in the $4 to $5 range, potentially very competitive projects. Some of the projects, including new ones in Australia, are much more expensive. And the industry just has to bear in mind this cost control, and as much as possible, partly avoiding some of the mistakes that were made in the LNG boom in places like Australia in recent years, where project budgets got completely out of control, but also thinking about new technologies and new ways to bring down the costs of developing LNG. Floating LNG may be one of those in some places, and but there may be even technologies for land-based plants as well. Gas also has to be competitive against renewables, and I've shown here our estimates of power generation costs from a whole range of different technologies. These are broken down into the capital cost, which is green, the operating costs in orange, fuel costs in yellow, transmission distribution in grey, and then the CO2 cost, if there was indeed a CO2 cost, imposed in black. And you can see from this that if we value gas at, let's say, $6, which is maybe a typical average price, of course it varies a lot around the world, but $6 may be a reasonable midpoint. At that price, gas is certainly much cheaper than diesel or than oil-based fuels. It's probably cheaper than nuclear, but it is more expensive than coal. It's more expensive than solar. It's more expensive than wind. And so in those markets, renewables and coal, depending on any action on pollution, those coal and renewables are going to be significant competitors to gas. Now, you can say that renewables, of course, are unreliable, require backup. That's all true. But renewables have got quite a long way to go before they start running up against those limits in many markets. There's a lot of room to put a lot of solar and wind into a lot of markets around the world, and we're seeing this in the Middle East. In several countries, we look at the UAE, we look at Egypt, we look at Morocco, Jordan, which are very successfully launching bids for solar PV and in some cases wind power and achieving extremely competitive prices. So prices of 2 cents or even less per kilowatt hour. And now add on transmission and so on, that's a bit more, but nevertheless highly competitive against gas. And certainly able to act as a way of saving gas fuel during the day, even if gas is still needed for backup during the night. So this is, again, a significant challenge and something I think that will tend to take some of the edge off gas demand growth, potentially in the Middle East and certainly in Europe and potentially North America too. And this just illustrates the point that I made about falling solar power costs. Dubai's first large-scale solar power bid, which was only 3 years ago, came in at 6 cents. Then a subsequent bid came in at $2.99 just 2 years later, and now we've had Saudi Arabia at 1 cent 70. So incredibly cheap electricity and incredibly sharp cost reductions in a very short time. There's also a bunch of Latin American countries I've shown, also here Chile and so on the same chart, which have also been decreasing their solar power costs very rapidly. And this means that in sunny regions that have available land, that we can expect to see solar prices maybe not falling too much more from here, but still at 1 cent 70, that is the cheapest electricity from pretty much any source you can imagine. And one wild card out there, I think, is advanced nuclear. I paid a visit a couple of weeks back to the Idaho National Laboratory in the US, which is a major laboratory for developing nuclear power technologies. And there's a lot of excitement there about some advanced nuclear designs. Now, nuclear power has somewhat fallen into disfavor. Environmentalists don't like it. Economists tend to think it's too slow and too expensive. But there are some very interesting nuclear designs out there that if they succeed, that by the mid-2020s, they could be coming into service and offering nuclear power plants that are cost competitive, very low carbon, can be built reasonably quickly, and are inherently safe and produce much less waste than traditional plants. So I find that's a very, very interesting breakthrough potentially as well. perhaps the odds are against it, but it's not impossible, and I think the success of shale gas and solar power in recent years should remind us not to bet against technology. So in conclusion, I see really for gas to achieve the golden age that the IEA has talked about, we really need 5 factors to come into play. One of them is cost competitiveness, to continue to be cost competitive against coal and renewables, to keep the costs of particularly of new LNG projects down, to keep supply coming strongly from unconventional and conventional resources so that demand is adequate and avoid supply shocks and avoid price squeezes, to complete the global market, so completing global LNG connectivity by introducing new pricing models, new business models, new hubs, new import terminals, and everything that goes with that, and on the pipeline scale, particularly in Eurasia, completing a lot of the pipeline network, and creating new markets, so making gas and LNG available to pretty much any market that wants it, and again through floating LNG terminals in particular, pipeline connections, gas hubs in places like Africa that can serve neighbouring markets, and potentially then moving outside gas's traditional markets in power and industry into markets like transport, like the shipping sector. And finally, carbon capture and storage to reduce CO2 emissions. If we had viable CCS that was working at a reasonable cost and that was somewhat cost competitive with other ways of reducing CO2 like renewables or anything else, that would take away a lot of the environmentalist argument against gas. It would mean that gas could truly say that it was a completely clean fuel and on a standing with renewable power. Now, I think if all of these things are achieved, then we could see gas not as the dead end and not as the bridge fuel, but as a destination fuel which continues well throughout the 21st century beyond the careers or of any of us in this room. So thank you for your attention, and then I look forward to the panel discussion we're about to have.